Good afternoon and welcome to your weekly FX Options Report. Today is Wednesday, May 26, 2010. In midweek trade, the major U.S. stock averages are managing to hold on to modest gains. Investors have been shifting their focus away from Eurozone sovereign debt concerns as well as geopolitical tensions in North and South Korea. Today, the focus has been on better than expected U.S. economic data releases. And also helping to boost overall market sentiment, the OECD lifted its estimates for global and U.S. GDP for 2011 and 2010. For the combined GDP, it is expected to rise by 2.7% in 2010, and for 2011, it is expected to climb by 2.8%. And shifting our focus on over to U.S. economic data releases, new home sales for the month of April rose to the highest level since May of 2008, jumping by 14.8% to a seasonally adjusted annual rate of 504,000. New home sales spiked higher, helped by the government tax credit. And durable goods orders also came in better than expected for the month of April, up by 2.9% to a seasonally adjusted $193.9 billion. That was much better than the 1.3% gain expected and the highest spike in orders seen in 3 months. Overseas, the European Commission announced plans for a network of bank resolution funds that would pay for banking crises in the future. And in the spot FX market, the U.S. dollar is trading mixed in today's session, higher against the euro and the pound, but lower against the Japanese yen. Now, the Eurozone currency does continue to see downward pressure. Over the weekend, Spain's savings bank Cajasur failed and was bailed out by the central bank. And on Monday, 4 regional banks in Spain merged in an effort to shore up its balance sheet. One way to trade your views on U.S. dollar strength or weaknesses to take a look at ICE's FX options. One advantage is that they are U.S. dollar denominated. For more information, you can go to www.fxoptions.com. And now in our daily trend report, we'll take a closer look at the individual IC FX option pairs, starting out with the AUX, which is the U.S. currency, against the Australian dollar. Now for that pair, consolidation is expected. The RSI is overbought and reversing to the downside. The preference of trading central analysts is short positions below 124.50 with targets standing at 116.40 and 113.50 in extension. And for the BPX, which is the US currency against the British pound, the upside does prevail. The pair has broken above its resistance and does remain on the upside. The preference of trading central analysts is long positions above 67 with targets standing at 71 and 73 in extension. For the CDD, which is the U.S. currency against the Canadian dollar, consolidation is expected. The RSI has struck against a major resistance around 70% and is reversing to the downside. The preference of trading central analysts is short positions below the pivot of 108.75 with targets at 102.50 and 99.50 in extension. For the EUI, which is the U.S. dollar against the euro, the upside does prevail. Now, the pair has rebounded on its new support and is approaching its previous high. And the preference of trading central analysts for the EUI is long positions above the pivot of 78 with targets standing at 82 and 84 in extension. Now moving on to the SFC, which is the U.S. currency against the Swiss franc, the upside does prevail. The RSI is supported by a rising trend line for the SFC, and the preference for that pair is long positions above the pivot of 112.80 with targets standing at 119 and 122 in extension. Last but not least, looking at the YUK, which is the U.S. dollar against the Japanese yen, the upside does prevail. Now, the pair is breaking below its channel lower boundary and does remain under pressure. The preference of trading central analysts for the YUK is short positions below 92 with targets standing at 88 and 86 in extension. And now moving on to your weekly trend opinion. Last week, the U.S. dollar remained strong against the majors amidst high volatility. Now the trend has lost some of its momentum. And in terms of portfolio performance, since its inception in August of 2007, it is higher by 1,353.55%. And since the beginning of this year, the portfolio is up by 73.45%. We do have a trend alert for you here, and that is for the BPX, which is the U.S. currency against the British pound. Now, for that pair, it was recommended in Trading Central's last follow-up to consider the BPX because the pair was pulling back on its new support ahead of a rebound. Now, Trading Central analysts are also looking at the EUI because it is on the upside, but has at the same time struck against its resistance or previous high at 82. Now looking ahead to next week, Trading Central analysts will be looking at the exotic pairs of the PZO, NZD, as well as the SKA. Now they will be looking at the PZO because it has struck against its medium-term bearish channel upper boundary, and the daily RSI lacks upward momentum. And for the NZD, it is on the upside and approaching strong resistance at 152.20. Last but not least, they will be looking at the SKA because it has broken above its bullish channel upper boundary and does remain on the upside. The daily RSI for that pair is also well directed. And that wraps it up for a weekly FX options report. Make sure to tune in next Wednesday for your weekly update. Thanks for watching and have a great day.